Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 2nd of January 2026. The first chart is the US dollar index futures. They closed slightly higher this week, albeit with a reduced spread, and all the trading was inside the previous bar's range. Volume was reduced and below the average. It was a shortened trading week, and it's a pretty lackluster trading week. You generally find that volumes remain holiday affected for the first 2 weeks of January. If something significant happens economically, you may find people called back to their desks, but that's rare. Most of the time, it'll be subdued trading and volumes for the first part of January. And this week, price floated higher on a lack of selling pressure, trading within the range of the previous bar all week. There was no intent being shown this week. Price just floated higher. And that's sort of a feature across many of the charts. The increased strength this week did place a few charts under pressure, and with trading being modest this week, it did allow some charts to be pushed lower in response. The lackluster trading was taken advantage of to some extent. E-mini S&P, this is S&P 500 index futures. They closed modestly lower this week and back down to the highs of the range here, closing pretty much at that level. We noted last week it was a bit of a soft up bar. The market didn't even attempt to move higher this week. It just came back pretty much within the range of that bar for most of the week, closing right at the highs of the range. It was lackluster trading again, to some extent the inverse of the US dollar, but at this point no great damage has been done. Remembering we have a little bit of strength in the background 3 weeks ago down here, and the up bar in response did help to confirm the buying support that was seen here. So really this is just some consolidation during the holiday period and the shortened trading week. So no significant issues with this week's trading, at least at this point in time. This is the US Treasury 10-year note futures. They did fade lower this week to close pretty much at the lows of the range here. This is an intermediate range. The market has found support at this level previously, and it continues to do so, at least to some extent. Price traded within the range of the previous bar for most of the week, and there was little intent being shown across this market. This is copper price futures. Copper price futures did pull back this week. I think the shortened trading week was taken advantage of to some extent. Interestingly, volume was increased and almost above the average down here. So there was some trading going on in this market despite the shortened trading week. Price did pull back within the range of the previous up bar, closing about mid-bar. So there was some buying support in there. There was a little bit of a battle going on between the buyers and the sellers. The mid-bar close does show that the buyers were in there supporting this market despite the supply being drawn out. I expect you'll see some testing for supply early next week, below this week's close, sort of in here, at least earlier in the week. And then price will respond depending on how much supply is actually drawn out. Gold price futures. Gold price futures closed lower this week. Volume was increased, but well below the average. Price is effectively pulled back to this level here. Spread increased considerably, and the market did close below the previous bar's low, which is always a modest sign of weakness. It's not serious, but it does suggest that there'll be a little bit more weakness to come. So there's unlikely to be a complete reversal here. much more likely is some testing for supply sort of in here for a period of time. Now that period can be variable. It might just be the first half of next week. It might be the next couple of weeks. So we'll just wait and see how this goes. But at this point, there has been a little bit of weakness emerge. It's not strong. Volume is well below the average. It was increased, but well below the average. So it's not serious. And while trading is lackluster during this holiday period, there might just be some consolidation sideways around this minor breakout line here. Silver price futures, and they've also pulled back this week with an increased spread and very strong volume. This market's always much more volatile than the gold price, and this market saw very heavy volume. We've been looking for a period of consolidation in this market for a while. I've been noting for many weeks that supply has been drawn out and demand was just so strong that the market continued to march higher. And at some point that was going to change, at least to some degree. You can see the market did attempt to push higher here, but supply was drawn out. And once this market started moving lower, the short-term traders started to unload and take profits. And you've seen the result here. Price did close within this up bars range. It didn't break the lows. It didn't even threaten the lows. So there is still some demand in this market. And don't be surprised to see this market continue sideways in consolidation mode, sort of through here, just for a period of time before it attempts to move higher again, because this market's been super strong, really, really strong. And it did need some consolidation. Price has pulled back this week. Very high volume does show you that there was probably some short-term traders have unloaded. They're out of the market now. And that's pretty much the ultimate goal of a period of consolidation anyway. And once they're gone, you'll probably see some sideways trading to confirm it. And if it proves to be the case, you may see the market moving higher sooner than you would normally, just because this market's been so strong. So watch for that. I do expect some consolidation early next week, and then we'll see what the response is if it's proven that supply is now low. This is light crude price futures, and they moved moderately higher this week, showing no great intent. Price closed about mid-bar and right back at that minor breakdown line just there, which is what you'd expect. Breakdown lines are always difficult to overcome. You generally need an increased effort to do so, and that increased effort will generally be seen with an increase in volume. And this week, volume was slightly reduced and remains well below the average during this holiday period. So there's no force or effort behind the trading. It attempted to float higher above the breakdown line, and it wasn't able to do so, and it ended up fading back down to close right at that level. This market's not really showing you a great deal at the moment. It's lackluster trading, and in response to that, you may well get another test for supply bar like this, similar to this bar, at least earlier in the week, and then a response if supply remains low. Into the currencies now. This is the Euro-US dollar currency pair. Price just drifted lower on low volume to close right at this level. This is a previous breakdown line in the background. Volume was slightly increased, but remained well below the average. And this week's trading was all within the range of the previous bar. So it was pretty soft trading. It was a slightly poor close, but on the low volume, it's not really that dangerous at this point in time. You'd possibly expect to see a test for supply in response, something like that. That remains to be seen. During these low volume periods, you'll often get bars that don't always show you much intent. And you really need to wait for the volumes to increase back to normal levels before you can understand what's really going on. Next chart is the British pound currency futures. And they also traded lower this week and also traded back within the range of the previous bar for the whole week. Price didn't come all the way back to this previous line in the background. So this market's a little bit stronger than the euro, but not particularly so. Volume was also increased slightly, but did remain well below the average. So this is not significant trading. Prices just drifted lower and low volume. And while the euro looked a little weaker than stronger, this market looks a little stronger than weaker. I expect you'll continue to see the market trading in this range for the next couple of weeks, unless there's a significant event somewhere that causes currencies to move. Barring that, I'm expecting lackluster trading for the next 2 weeks. Japanese yen currency futures, and they faded lower this week. Still within the previous range, so they haven't broken down any further. Spread narrowed considerably. All the trading was within the range of the previous bar, which was a weak bar itself. Volume was reduced and remained well below the average. There's not a great deal to be read into this at the moment. This market does appear to be much weaker than stronger, but at this point in time, it is holding on within this range. So we can give it the benefit of the doubt. We'll just see how things play out when volumes begin to increase in a couple of weeks' time. Aussie dollar currency futures. Aussie dollar currency futures also traded slightly lower this week in response to the minor strength seen in the US dollar. Price came back to close within the range of the previous bar and within the previous bar's upper range, the higher half of the bar. Price closed right at this old line that I've dragged across from the past. It's a breakdown line in the background. And with some of these currency charts looking stronger than weaker and others looking weaker than stronger, I think this one's looking stronger than weaker. It looks more like it would like to go higher over time than lower. Volume remained well below the average, although it was slightly increased this week. And similar to some of the other currency charts, there's no great intent being shown. It's lackluster trading, and you just have to wait until volumes increase before you get any real indication of a change in sentiment or intent being shown. Bitcoin futures. Bitcoin futures continue to trade in consolidation mode sideways, which is kind of what we expected. Trading in here in consolidation mode. It's really similar to what happened back over here previously. And the market's attempting to find support and absorb supply as it trades sideways, following some breakdowns in the background. Price traded slightly higher this week, mostly within the range of the previous bar all week. Volume was slightly increased, but remains well below the average. So this is lackluster trading. It's not telling you a great deal. I don't expect volumes to increase back to normal levels until about 2 weeks into January. So unless there's a significant event, this market is just primed to go sideways within that range, absorb supply, build up some strength, and then when there's supply is proven to be low, there may be an attempt to move higher. At this point in time, the market is attempting not to break down any further and absorb any supply that's drawn out within this range and not continue lower. And that's the real intent behind the trading at the moment. It's not really ready to move higher just yet. So I expect this market will just continue sideways, absorbing supply and attempting to avoid a further breakdown. Just back to the US dollar index futures quickly. You can see price moved higher this week, but without any great intent. Spread was narrow and reduced over the previous bar. Volume was reduced and well below the average. And I expect volumes will remain holiday affected until mid-January approximately. Okay, thanks for your time. Should be back again next week. Thank you. See ya.